Markets are at new highs, but the new money for 2020, it's not evenly distributed. It never is. Where is the money going in 2020 so far? Nick, a few trends stand out to me here. Outflows from gold funds, inflows into growth and emerging markets. Gold in particular, seen outflows over 500 million in the last few weeks. Nick, what's going on?
Yeah, that's just at the beginning of the year. And I think it's been caused by the gold's rip in the very back half of last year and some rebalancing of portfolios as we start 2020. I don't think it's anything fundamentally bad. As a matter of fact, central banks are still buying a lot of gold. It looks pretty good for 2020 as well.
And the demand in emerging markets, especially as more citizens are entering middle class, they have more money. What are they doing? They're buying gold.
Yeah, makes sense to me. Growth ETFs. We had this debate at big inflows this year. Value funds have seen outflows. This is a big difference from 2019. The flows were into value. They were 3 times bigger than into growth, particularly in the fourth quarter, Nick. One trend continuing, flipping around here, like growth and value, is that going to continue?
I think it will. The growth ETFs that most people own are predominantly tech, 30 to 40 to 45% technology. That group should continue to work. The value ETFs are all financials, or heavily financials. That's still going to lag. So I do think we're going to see a reversal in 2020.
Yeah, value still is financial, some energy stocks,
It is,
I
and
guess.
growth is so FANG heavy, it's crazy, even with these diversified indexes. And advisors, and we're watching their movement on what they're looking for, what type of ETFs that they're looking for. And a lot are looking to diversify. They want to get out ahead of this late stage bull market.
We've been talking about this for years. I think the problem is growth is getting harder to find, so people will pay more and more for that. And you don't get GARP anymore. You get growth at a reasonable price. You get growth at any price. You get GAP, growth at any price, essentially. And I think that is a problem. At some point, people push back, but it's not yet. It hasn't happened yet.
No. And what happens, most people always do it after the fact.
Okay, one trend is continuing from 2019. Emerging market flows are off to a strong start, attracting $1.5 billion in 2020, more than double the run rate last year. That is a trend. Now we got a somewhat weaker dollar. We got a better, somewhat belief in a bottoming in the global economy. Is that going to continue?
Absolutely. It's a pretty bullish sign to see money flows into emerging markets. They tend to be the ones that will work in a late stage part of the cycle when all the developed economies are chugging ahead and EM kind of comes along with it. And it's a very important point of validation that we are going to get a U.S.-China trade deal this week.
Going to make it?
Valuation standpoint, you're 40% off U.S. stocks. EM stocks are a deal at this point.
Yeah, I would agree with that.